Rocket Lab's Electron Rocket is a groundbreaking small launch vehicle designed to take up to 300 kilograms to Earth orbit. Powered by 9 in-house designed Rutherford engines with a proven performance history, it boasts the world's first 3D printed electric pump-fed engine. Advanced manufacturing techniques now allow Rocket Lab to produce the carbon composite components of this rocket in just 12 hours, a process that would have traditionally taken 400 hours with extensive manual labor involved. Electron has now launched 29 times. 26 of those attempts were successful and 3 were failures. Since the beginning of operations, this tiny but mighty rocket has deployed 149 satellites to Earth orbit. In 2019, Electron added another feather to its cap with the announcement of enhancements to allow for first stage reusability. This is a feat that no other small orbital class rocket is close to achieving. Additionally, the Electron has demonstrated the fastest turnaround time of any small launcher, with just 15 days between launches. Second and third places are a distant 115 and 164 days between launches. Electron is also the second most frequently launched rocket in the United States, behind only SpaceX's Falcon 9. However, even with all these impressive accomplishments under its belt, the most important accomplishment of all has yet to be achieved, and that is becoming profitable. Currently, the Electron is operating at a negative 12% gross margin on its launch business, and what we're going to explore today is how profitable do we think the Electron can become in the future, and what needs to be done to get there. This is an extremely important question for all investors of Rocket Lab, as thus far all small satellite launchers have operated at a loss, and we need this to change in order for the bright future of Rocket Lab to be realized. Before we go ahead and dive into the details on this, please do consider hitting like and subscribe down below to help out the channel and see future videos. And we also have links to our Discord server down below, as well as my Twitter feed. Thanks for tuning in, and now let's dive into the Electron rocket. First of all, let's start off with what we do know. So the launch business is currently operating at about a negative 12% gross margin. This was mentioned in the most recent earnings call. And we currently have a launch fee of about $7.5 million per launch. This can vary depending on the profile of the launch, the payload, where it's going, but on average about $7.5 million. Now, we also know that we had 3 Electron launches in the previous quarter, which comes out to about 1 per month, and that's the baseline level they're looking at going forward. So with some quick math, we can find that it currently costs Rocket Lab about $8.4 million per Electron launch. But a lot of the launch infrastructure costs are fixed regardless of how many launches happen in a given year or quarter. Think about things like the setup of the launch pad. It's operating there year-round regardless of if there's 3 launches in 3 months or 6 launches in 3 months. They still need to pay a lot of the same fees to operate that facility. Similarly, they have their factories operating, pumping out currently about a rocket a month, and they can scale those up to a rocket a week while still maintaining the same real estate costs, equipment costs, and things of those nature. So as they scale up their launch cadence, this can have a dramatic difference on the underlying margins of each launch. So what I've done now is I have charted out every single flight of the Electron rocket to date to get an idea of their previous launch cadence and how fast it's growing, so we can try to project into the future how many launches they will make. Now, Beck and Spice and management have also said on various earnings calls and different forums that they are shooting to eventually get to 2 launches a month or 24 a year, and they do think they're on track to get there. Of course, there's still a long way to go. But if we scroll through here, we can see all 29 launches to date, and we have information on payloads, dates, whether it was successful, if there was a catch attempt, basically everything you might want to know about each launch. Now, for today's purposes, all we really care about is the date of the launch and whether it was successful. Those are the most important factors at play. In the future, we're going to care a lot more about the recoveries, but of course, there's been no reflown boosters as of yet. We also don't really care too much about the payload, although that can be an important factor for earnings and how much each launch makes. We're kind of just averaging it out right now. So what I've done is I've gone ahead and charted out the number of launches we've had to date. So in 2018, we started with 3, then 2019, 6, 2020, 7, 2021, 6 again. 2021 was a rough year for a couple of reasons. We had a failure, and then they had to investigate that failure and find out the root cause before resolving it. So this number is actually kind of artificially low. And it's kind of a drag, but I don't expect any more issues like that in the future. The Electron is a very proven vehicle at this point. It's been quite a while since we've had any failures. So 2021 was a rough year due to that failure, due to COVID, due to a lot of things. But I'm not necessarily expecting that to continue. As we can see, we actually had a dip from 2020 to 2019, which is not something you would have expected to see. Now, 2022 is not finished yet, and what I've done is gone ahead and projected out 1 launch per month for the remaining months in the year. This could be off. We could have more than that. We could have less than that, but that's kind of the baseline we're working with here. Is on average, we're going about a launch per month these days, so that's what I've projected out into the future at. So that gives us 10 launches for 2022, and we do see, a pretty decent growth line here. Obviously, we had that aberration in 2021, and we would like to see more launches, but unfortunately, there's been customer readiness issues and a lot of other things. So this is kind of the trend we're on right now. And now I've kind of tried to project into the future what we may be looking at. So right here, we have kind of a bear case where we see pretty linear growth. And I've projected out pretty much in a straight line. Future growth, we're looking at about 20 launches in 2025 and 16 in 2024. This is, in my mind, pretty unlikely. I think launches are going to grow faster than this. I'm basing that on comments from Peter Beck and others, as well as just the order backlog has been growing, and we've seen a lot of competitors have struggles. So the competition isn't really there at this point for the Electron, and I think the launch cadence is really going to pick up in the future. I certainly hope so. But this is just kind of a base case if you want to play it safe, if you're a little nervous, just to kind of err to the low side of things. This is more, bear case. This is kind of a base case. Now we're talking about reaching 24 launches, which is 2 per month, that number that the company has talked about, by 2025. I believe they've spoken about reaching it by 2024, so we're kind of pushing that back a year, giving room in case there's any issues, in case demand is softer or anything else might come up. But in this model, we're looking at about 14 launches in 2023, then up to 20 in 2024, and 24 in 2025. This is probably the model I'll kind of base our numbers on going forward, but obviously you can put your own numbers in here. If you really believe that the small sat launch market is going to explode, you can pop in a 30 here even, or your 24 in 2024, which is more what the company is guiding. So to be a little bit more bullish on that, you can definitely pump up those numbers and see that reflected in the higher revenue and quicker profitability of the Electron rocket. Now, unfortunately, we're going to have to make some guesses. Your guess is probably as good as mine on this, just trying to put in some reasonable numbers, figure things out from various earnings calls and discussions. I could be way off, but this is kind of what I'm thinking. So in terms of incremental cost per launch, we know right now it's costing $8.4 million per launch. They're losing money. This is 12 launches per year. So right now, running the launch business is costing about $100.8 million for 12 launches a year. So let's say about half of that is static costs, things that don't go up. Your launch pad isn't changing. It has the capability of launching many more launches from the same location. Factory has the capability of pumping out many more electrons than it's currently pumping out. So a lot of these static costs don't change regardless of how many launches you are managing to get out of the facilities up to a point. So I'm saying about half the 50.8 million is a static cost, and the rest is incremental costs where, yes, you do need to buy more materials in order to launch more rockets. You need to spend more money on fuel in order to launch more rockets. You need to pay more people. So yes, there will be more money spent in order to launch more, but a lot of the investments have already been put in place, so not everything is going to go up in cost. So according to these estimates, each additional launch is going to bring in $7.5 million in revenue, but only cost Rocket Lab $4.2 million. So following this model, let's try to chart out when Rocket Lab will reach profitability and what kind of numbers we'll be looking at a few years down the road. Okay guys, so here is our chart of the numbers we previously came up with, projected out into the future. 2021 is red is because it was a rough year with that failure. 2022 is also projected out, so this number may change, but these are kind of the estimates we're working with. We showed you them previously, and now to calculate revenue, we've said that in 2022, we're charging $7.5 million per launch. So you multiply by that by 10, you get 75 million. Continuing on, everything goes up in price a little bit. Back in 2018, they were actually charging 4.5 million per launch, and now we're up to 7.5. That trend is likely to continue. So I'm gradually increasing the prices they'll be charging per launch. That means in 2023, I have us charging 8.5 million. Multiply that out, we get almost 120 million. 2024, I have us charging 8.9 million per launch. And 2025, I have us charging $9.5 million per launch. Obviously, you just multiply that by the number of launches and you get the revenue. So now we have our revenue. Let's look at our costs. 2022, we estimated our quote-unquote static costs for facilities, equipment, and that kind of stuff we've already purchased is around 50.8 million. So we'll increase that too modestly, just because, as I said, everything goes up. Inflation is hitting all of us right now for sure. So we have 50.8 plus the 4.2 million iterative cost per launch. These are things we have to spend money on every launch, whether that is materials, fuel, personnel for extra hours, for extra launches, that kind of thing. So it's costing us 4.2 million per launch plus the 50 static cost. We're increasing that to 55. 58, and we're also gradually increasing our cost of the rockets a little bit as well due to material costs going up. Then we're up to about 60 and 4.4 million. So this will give us a decent idea on costs versus revenue and going by our estimates. Let's create a quick chart. And here we can see we have cost in yellow, revenue in red, and launches in blue. And we hit profitability in this model actually in 2023, which is a bit early. So we probably have to adjust the numbers a little bit. Perhaps my static costs are a little low, my iterative costs are a little high, but we can see by 2025, according to this model, we're starting to make some decent margins here. Like you can see the gap between revenue and cost is just growing bigger and bigger as those investments continue to pay off in the future. I did a bit of quick math here, just subtracting out the cost from the revenue, and we get the gross profit in green in this chart. So you can see we're quite negative 2018, 2019, 2020, and we start to flip to profitability around 2023 or 2024, depending on how you work the numbers. This number is rising rapidly, which kind of goes to show the model of how it works. Now, I'm not saying these numbers will be perfect, but it'll give you an idea of kind of how the scaling process works and allows them to turn a profit. So according to this model, at least, we're looking at gross profits of around $60 million in 2025 from launch, and that would continue to grow in the future. However, this isn't all, because reusability can be a massive game changer to the profitability of the Electron. We have heard previously from Peter and the crew that 50% of launches of the Electron rocket can be reused. It depends on the launch profile, where they're launching, different factors, but roughly about 50% of launches they see being reused in the future. And each rocket that they reuse will save a ton of money. They don't have to remanufacture a brand new rocket. So how are we going to think about this? Let's go back to our charts and see if we can work reusability into the equation. Okay guys, so what I've done now is I've added a new row called reuses. So for every reused vehicle, we're going to put in a number in here. And of course, these are just projections, but we do know that they're aiming for 50% reuse. So I have one reuse in the remainder of 2022. Perhaps this is a wishful thinking, but I'm really hoping that we'll catch a rocket and be able to use it by the end of the year. Maybe that's a little too early, but it remains to be seen. 2023, I have 4 reuses. 2024, I have 8 reuses. 2025, I have 12 reuses, which is that 50% of the total launch number, as they gradually scale up to getting to 50% of the launches. This could be off. They could manage to go reusable a lot quicker. We could be seeing in 2024 half of the launches being reusable already, or even 2023 perhaps, depending on how quickly they really get this down. So now that we have these reuses numbers in here, which of course you can change depending on what you think, we can change up the cost structure a little bit. So what I've done now is I am subtracting about, what I'm saying here is they're saving about $2.2 million per reused vehicle flown. So in 2021, that's only 1 reused vehicle. In 2023, that's 4 reused vehicles. 2024, that's 8 reused vehicles. 2025, 12. This is actually dramatically reducing the cost, and this is probably pretty conservative. So potentially it could be reduced more, and as we go on, those costs are probably reduced increasingly. So, but I'm just trying to keep it simple here. This is really back of the napkin type stuff. It's not a extremely sophisticated financial model. We're just trying to get an idea of how profitable they could potentially be and when they might hit that profitability. So let's check out the chart for this new model, including reuse. So now we have the chart for the new model, which includes reuse, and you can really see that the difference is quite dramatic. The profit line is going up a lot quicker. The cost line is going up a lot more slowly. And it's really just a great thing for the business. Now, of course, maybe my numbers are off. It costs them a bit more to refurbish, but I think I'm being pretty fair with the costs here. So this really is a game changer when you start to look at the numbers. Let's look at these charts side by side. Okay, so guys, we have the top chart, which is without reusability, and the bottom chart now includes reusability. Obviously, the revenue line is going to stay the same because they have the same number of launches with each of these options. This may not be entirely true. Reusability may allow for increased launch cadence, but for the model here, we're just using the same number of launches, adding in some reusability in 2023, 2024, and 2025. You can see the number of reuses is now in purple. And we have the profit number in green actually skyrocketing much higher than without reuse. So in 2025, we have about 60 million in profit without reuse, but with reuse, we're now over 100 million. So that is a massive change to the entire model, and obviously will be a big factor going forward. Now that we've kind of gotten an idea of how Electron can become profitable and perhaps when they might become profitable, let's wrap up the discussion. This video has given you an idea of how the Electron can finally become profitable after losing money for so many years, and the kind of model it will take to break a profit in the future. Now, my numbers may be off. I am making a lot of assumptions here, a lot of estimates. I'm sure I'm wrong in various ways. Nobody knows the true numbers except for Peter, Adam, and the team. But this is how it will look in order to have the scaling effect allow you to make more money, because a lot of those base costs are fixed or not moving very quickly. In addition to that, reusability will add a massive boost to potential profits and really take the entire model to the next level. What do you think? Do you think I've been too conservative in the launch numbers? How many launches do you think we're going to see of the Electron in 2023 and 2024? How much money do you think reusing a booster will save? Is 2 million a little too cheap? Maybe it'll save more like 3 or even 4. Let me know down in the comments below. I'm really interested to hear your thoughts. I'm just always playing it safe with these models. I want to, if I'm going to be surprised, I want to be pleasantly surprised and not upset and surprised on the downside. So that's why I try to play it safe with the numbers. But of course, you're free to put in your own numbers and come out with your own calculations. That's it for today, guys. Thanks for tuning in. Please subscribe if you haven't already, and I'll see you in the next video. Bye.